Hey guys, Bill Soriano from Pittsburgh, and it is Sunday, November 4th. I wanted to make a video. As you know, I've been making some videos here showing you a new trading strategy that I am currently using that's working very well. And what I wanted to show you today was there were some trading opportunities on Friday that you could have taken. Now, if we could look back at some past opportunities that I showed in some videos prior to this video, and this is going back, guys, to 10/31, right? So this was, I believe, Thursday, 10/31, and this was GBP USD. And again, our strategy is we're using the 15-minute chart. We're looking for the average daily range to be met, and then we're looking for an exhaustion candle. Okay, that's how the strategy usually works. Now, I'm going to show you how you could have used the strategy slightly differently on Friday, but normally the strategy works where the average daily range is usually broken, then we get the exhaustion candle, or in this case with GBP USD on the 31st, the exhaustion candle comes as the average daily range is broken. Okay, so there's a couple different ways this can work, but as you can see, we get the move up, we get the exhaustion candle right here. We get in on the next candle, it moves up a little higher, we wouldn't get stopped out, and then we get our 50 pips. So we're in and out really quick on this currency pair there, right? This was GBP NZD the same day. We get the move up through, right? The ADR is met. Right here we get the exhaustion candle. We get in on the next candle, and we get our 50 pips right away, okay? Now, I can't measure this because these are screenshots for you, but because the average daily range is so great in GBP NZD, that is a 50 pip move. It's actually more than a 50 pip move back down. Another one on 10/31 was GBP JPY. On this one, the exhaustion candle comes as the daily range is broken, right? We get in on the next candle, it goes up slightly higher, and then we get our 50 pips and we're out. So there were a lot of trades you could have taken on 10/31, and I made a video about this that's in the group here, and I'll show you in a second where to find that. EUR GBP makes a big move down. Right here we get an exhaustion candle. We get in on the next candle and take it back up for our 50 pips. Now, just a note here, in EUR GBP, we say 50 pips. So basically, when we take our trades, we're risking 25 pips to get 50. But that's assuming that the average daily range of the pair is 100 or greater, 100 pips or greater. Now, in EUR GBP, the average daily range is just 46 pips. Okay, so when you look at this, the first two are the number of pips. So the average daily range in EUR GBP at this time is 46 pips. So that means we're going to look to get, we only have to really get 23 pips. Okay, so we would only want to risk about 12 pips to get 23 pips in EUR GBP. So the only time our risk of 25 to get 50 changes is if the ADR, the currency, is less than 100 pips at that time. So there's a lot of different rules here, guys, and the reason why I mention this is because right now I have a Forex group, a free Facebook group called the Forex Trading Authority. And this is where I'm posting all these videos as well as on my timeline. Now, what I'm going to be doing is I'm going to be creating a paid Facebook group where I'm going to have all the videos giving complete instructions on this strategy from start to finish, right? How to set up your MT4, how to get the indicator that we use, all the different ways that the trade, that the setup can be done. And we'll also be putting the trading signals in that group as well. Now, you may think to yourself, well, how much is that going to cost? What are you going to try to charge us for that? It's going to be an insanely low amount, probably somewhere around $15 a month. It'll be a monthly membership to the group. You can cancel at any time, and there will probably be like an annual option that you can take, probably for like $50 or something like that. But anyway, so it might be like $15 a month or $50 for a year, whatever option that you would want to take. But we're going to be putting that together very soon here. So if you want to get information on that, make sure that you drop me a note here in the group or send me a message on Facebook. My links, the links to the group and the link to my Facebook page, my main page, will be in the description area of this video. So anyway, when you look at these are Friday's charts now. This is Friday's price action, GBP, JPY. Again, the 15-minute chart. We're going to look at a couple trading opportunities that we had here on Friday. Now, this is USD JPY. Average daily range is about 70 pips, so we need the average daily range to be broken. That happens when these lines here turn red, right? So we know that broke the average daily range right there. As you can see, the average daily range is 69, and today it moved 76. So we look for that to be broken. Now we need an exhaustion candle. We don't get it. We didn't get an exhaustion candle in this pair, so we would not have taken a trade there. Now this is a unique situation here with AUD JPY. This is how the strategy is used, just slightly different. In AUD JPY on Friday, the exhaustion candle comes right here before, but the average daily range isn't broken yet, right? So when this happens, we can wait for the average daily range to be broken, which happens on the next candle, and then we can take the trade on the following candle. So the two criteria are met. We have an exhaustion candle, and we have the average daily range broken, okay? It doesn't matter what order it comes in, okay? It's usually a better signal if the average daily range is broken first and then the candle comes, or sometimes, as we've seen in the other trades on the 31st, if the exhaustion candle is actually the candle that breaks the average daily range. Those trades have a little bit higher probability of success, but you can also do it like this too, where the exhaustion candle comes first, and then you see here on the next candle, the average daily range is broken. Now, the only caveat to this would be that, you can't, it has to be broken rather quickly, I would say within the next 3 or 4 candles. And that happens obviously on the next candle. So you would take this trade right here. Now this trade is a little bit differently. ADR is 83, so we're trying to get about 40 pips. We're trying to risk 20 to get 40. Okay, so we get in here, and we would never get stopped out, obviously, by this peak here. What happens is we get a drop of about 27. It moves back up, and then it drops down and gives us our 40 pips that we're looking for, right? Now, remember, we usually risk 25 to get 50, but that is only on the pairs that have an average daily range of 100 or more. Okay, if the average daily range is less than 100, then we have to adjust that. Okay, so this was a good trading opportunity in an AUD JPY on Friday. Now, there were a couple other ones here. This is NZD JPY, right? Average daily range 84. So again, we're looking to risk 20 to get 40. We get the exhaustion candle, and then on the next candle, the average daily range is broken. So if we get in right here, we get a good drop down here, not quite for our 40 pips, right? Moves back up, and then comes back down, and we get our 40 pips, right? So another good trading opportunity on Friday, NZD JPY using our method. Let's see if there was one more. I don't think this obviously dropped down here, right, through the average daily range, but we don't get an exhaustion candle. Okay, so in USD CHF, the average daily range is 54. So it doesn't move that much, but we need an exhaustion candle to be at least 25 pips here. And as you can see here, we just don't get that. So there was no trade opportunity there, even though it did come down, meet the average daily range, and then make a big move right back up. Let's see, I believe there was one more here. This is EUR/USD. Again, average daily range 76, so we're looking somewhere around 35 pip exhaustion candle, and we just don't get that. So there was no trading opportunity there. Right here, again, the average daily range is broken, but we have no exhaustion candle. Let's see here as we scan through. Right here, here's one that was just almost, guys, okay? This is EUR/AUD. Average daily range is over 100. So again, we're looking for that 50 pip exhaustion candle, which we get right here. Obviously, we get a 79, 80 pip exhaustion candle. And then on the next candle, we need it to break the average daily range, and it just misses from doing it, guys, because the average daily range is 109. And you can see here from the top down to here is just about 103. So it just missed hitting that. And then as you can see, it makes the big move up. We could have got 50 pips, but it just missed hitting that. So at this point, this line wouldn't be red. Okay, so like I was saying, guys, this one, EUR/AUD, just misses hitting that average daily range. So that wouldn't be red. And then it actually turns red after it moves back up to here. Because again, we're looking for that 109 pip move. So if you go from the bottom here up to here, you get that 109.5. So that's where it would have turned red at that point there. And so just missed, and that would have been a great trade to pick up some pips on. And I think there may have been one more. The same thing happens in AUD/CHF. So again, the average daily range 54. We only need a 25, 27 pip exhaustion candle. We get a 40 pip exhaustion candle here. And it appears that it just misses breaking the average daily range here. 54 pips is the average daily range. If you look from the bottom here, the lowest point up to there, we just miss it by like 1 pip, guys. So, had it just moved that 1 more pip, then we would have been able to take that trade right here, and we'd be looking to get 25 pips, would be out of that trade and with our profit, right? And again, we normally risk 25 to get 50, but that's if the average daily range of the currency pair is 100 or greater. In AUD/CHF, it's only 54. So we would adjust that then where we would be risking 12 to get 25. Okay? So again, there's a lot of different ways to take these trades. All we use is the average daily range, and we look for an exhaustion candle. So again, I'm going to be putting together the training for the paid Facebook group, guys, and everything's going to be laid out for you there. Again, it's probably going to cost just $15 a month to get into the group. All the videos will be in there showing you exactly all the criteria needed for the setup, what your risk reward is going to be, because one of the most important points of a trading strategy, guys, is your risk reward, your money management. Okay? Remember, if you don't pay to get in this group, that's fine. Keep watching the videos. But remember that you always need to have a risk-reward ratio of 1 to 2. So if you're going to risk 25 pips, you need to be able to get 50 pips on your take profit. Okay? You need to be able to do that because you're not going to win every trade. Although I'll tell you, we've been checking this strategy over a few months now, and it is working at a very high rate. The only downfall to the strategy is you don't get trading opportunities every day. Okay, because you have to wait for that average daily range to be broken, so we don't get trading opportunities every day. But the trading opportunities that we do get have a very high success rate. So again, we have the free. There'll be a link to the free Forex Trading Authority group on Facebook right down below this video. And if you want information, if you want me to send you the information when the paid group is ready, just message me on my main page or message me in the group. If you are a member of the group, if you're not, join the group, send me a message, or click on the link from my main Facebook page and send me a message there, and just tell me that you want the info on how to join the paid Forex group on Facebook. So again, this is Bill Soriano from Pittsburgh, and let's make it a great day trading Forex.